Previously, I did a poll asking what stock you want me to analyze, and Seatrium got a landslide win with over 36 votes out of a total 141 votes. So here I am. Okay, so in fact, the stock research done for this video will benefit my wife as well, since she got hold of Seatrium shares long time ago, I think back in 2020, due to her investment in Sembcorp Industries. Anyway, coming back to today's video, we're going to take a closer look at this shipbuilding company Seatrium, or previously known as Sembcorp Marine. Fresh our memories, Seatrium is like a phoenix reborn, okay, as a result of the merger between Sembcorp Marine and Keppel O&M, two of the largest players in the offshore marine sector. But it definitely surprised me when Seatrium is able to replace Keppel DC REIT and become part of the STI Index. The one that, with so many blue chip stocks inside. So, is this a good time to buy Seatrium now? Is it going to rebound like the other blue chip stocks like Wilmar, like Singtel or DBS? Well, stick around as we explore the good, the bad, and ultimately our verdict on this newly inducted STI Index stock. Okay, let's start off with the good news. Seatrium has been making waves in its order book wins lately, where it achieved a net order book of $17.7 billion, with 33 projects under execution until 2030. So that's a very long time period. Okay, so on top of the promising developments in the projects and the partnerships, their capital management is improving by leaps and bounds recently. So they have secured green financing of over $1.6 billion, which typically comes with a lower interest rate to support, companies' sustainability efforts. And Citrum's net gearing ratio has also improved to 0.15 times. In fact, from what I've read so far in the presentation slides or other analyst reports, Seatrium is aggressively pushing for the offshore renewable projects and decarbonization efforts. You can see from this slide where they talk about how Seatrium is going to focus on four key industry tailwinds: the offshore wind, the new energies, marine decarbonization, and greener oil and gas. So given Citrum's strong track record and how Singapore is among the leading countries to adopt this kind of ESG practices, the upcoming green projects are expected to boost Citrum's order book and revenue in the coming years, as well as help to diversify its portfolio away from the very bad traditional oil and gas segment. The last positive point is that analysts are mostly bullish on the stock too. The average 1 year price target is 17 cents. Alright, that's the average price target, or 48% potential upside from the last traded price of 12 Singapore cents. In a nutshell, there are many positive points for the company, but it's not a bed of roses for Citrum too. A picture speaks 1,000 words, and just seeing how the share price can decline from $2+ in year 2014 and close to 10 cents in 2023 tells us how terrible this business model is. So many of us would have guessed that the Citrum's fate ties in very closely to that of the maritime industry or oil prices in general. Yes, this is true to a particular extent. When oil prices are trading at around $100 in early 2014, Citrum is making a profit that year with around 10% profit margin. But with the following years, when oil prices drop to between $60 to $80 per barrel, Citrum's profit margins totally disappear. Okay, so their profit margins went to close to zero, and there are even multiple years of losses in the past decade. So, if you were to ask me, the reason is because Citrum's performance not only has to rely on the ups and downs of the macroeconomic environment, it also has to face intense competition from Asia's or the global rivals. And seeing how Keppel Corp keeps selling off its stake in Seatrium just sort of leave a very bad taste in my mouth. Now, here's the moment of truth. In order to answer the question whether Seatrium is a buying now, well, I look at it from two angles. Firstly, the short-term picture looks rosy in that most of the analysts are putting Seatrium at around 1.3 times to 1.5 times price to book value. And I do agree that the price to book value has some headroom to grow at least 30% from the time of me making this video, underpinned by the many positive developments recently. On the other hand, long-term wise, it's hard for me to envision how Seatrium can become a long-term big winner without the competitive edge or the pricing power needed for the continuous reinvestment back to the business and the long-term sustained growth. So what do you think of Seatrium? At what price will you buy or sell the stock? Let me know in the comments down below and also help me to smash the like button. And don't forget to subscribe to my channel and hit the notification bell for more stock analysis and updates. Next up, if you have the time, you can also watch this video where I compare the 5 cheap dividend stocks. As always, remember to do your own due diligence. Thanks for watching and I'll see you next time. Bye.